What if I told you that while most of the crypto market was distracted by short-term price swings, XRP was quietly undergoing one of the most important stress tests in its history, and it may have just passed with flying colors? Welcome back to the channel. Today we're diving deep into a major development shaking the XRP community and catching the attention of serious market watchers. If you care about where digital assets are headed next, you'll want to stay until the end because what we're about to discuss could reshape how people think about liquidity, scalability, and XRP's real-world role in global finance. Over the past few years, one of the biggest criticisms thrown at cryptocurrencies has been simple. Can they actually handle real financial pressure? It's one thing to move tokens between wallets during normal market conditions, but it's something entirely different to perform under extreme volatility, heavy transaction demand, and institutional-level volume. That's where the concept of a liquidity stress test comes in. A true liquidity test examines whether an asset can absorb large buy and sell orders without massive slippage, maintain stable transaction speeds, and continue processing payments efficiently even when demand spikes. Recently, XRP appears to have faced exactly that kind of pressure scenario, and the results are turning heads. During periods of intense market volatility, trading volumes for XRP surged across multiple exchanges at the same time. Large transactions moved through order books rapidly, and yet spreads remained relatively tight compared to many competing digital assets. Liquidity pools did not dry up, and settlement times on the XRP ledger remained consistent. This is significant because liquidity is the backbone of any financial system. Without it, even the most promising asset becomes unstable. What experts noticed was that XRP did not experience the kind of network congestion or extreme execution delays that often plague other blockchains during peak demand. Instead, the infrastructure held firm. One reason this matters so much is XRP's design philosophy. Unlike many cryptocurrencies that prioritize decentralization above all else at the expense of speed, XRP was engineered with high throughput and fast settlement as core features. The XRP ledger is capable of handling thousands of transactions per second with minimal fees. In a stress environment, that efficiency becomes more than a technical statistic. It becomes proof of resilience. When trading activity accelerates and large capital flows move simultaneously, the system must respond instantly. In recent weeks, XRP demonstrated that it could process heavy flows without breaking stride. Liquidity is not just about speed, though. It is also about depth. Depth refers to how much capital sits in the order books at various price levels. When a major player enters the market with a large order, shallow liquidity can cause violent price swings. During this stress period, XRP's order books across several major platforms showed substantial depth, allowing large transactions to execute with controlled price movement. This is a strong signal that participation is broad and that market makers are confident enough to provide continuous liquidity, even under uncertain conditions. Another key factor that impressed observers was cross-border payment efficiency. XRP has long been positioned as a bridge asset for international transactions. When transaction demand increases globally, especially across corridors involving different fiat currencies, the network must maintain both speed and cost efficiency. Reports from analysts monitoring transaction data suggested that settlement times remained near instant, and fees stayed extremely low, even during heavy usage. That combination of low cost and high throughput is exactly what institutional players look for when evaluating digital assets for real financial infrastructure. Some experts believe that what we are witnessing is not just a random surge in activity, but a deliberate testing phase. Financial institutions and liquidity providers often conduct internal simulations and real-world volume pushes to evaluate how an asset behaves under pressure. If XRP has indeed been undergoing such real-time stress scenarios, the fact that it maintained stability sends a powerful message. Stability under pressure builds trust, and trust is the currency of institutional adoption. Markets do not reward hype in the long term, they reward reliability. It is also worth noting how XRP performed relative to the broader market. During extreme volatility events, many digital assets experience sharp network congestion, rising transaction fees, and delayed confirmations. In contrast, XRP's transaction costs remained fractions of a cent, and confirmation times stayed consistent. That predictability is crucial. When institutions move millions or even billions of dollars, unpredictability equals risk. A network that can consistently settle transactions in seconds, regardless of volume spikes, becomes far more attractive for real-world financial operations. The psychological impact of passing a liquidity stress test should not be underestimated either. Retail investors often focus on price charts, but professional analysts focus on structure. When structural strength is demonstrated publicly, confidence can increase quietly behind the scenes. Market makers may expand operations, institutional desks may increase allocation models, developers may build more aggressively on the network. Liquidity strength can create a compounding effect where increased trust attracts more participants, which in turn deepens liquidity even further. Of course, no asset is without risk, and no stress test guarantees future performance. Market conditions evolve, regulatory landscapes shift, and competition remains intense. However, what stands out here is that XRP has shown measurable resilience when it mattered. In finance, resilience is not proven during calm periods. It is proven during storms. The recent performance suggests that XRP's infrastructure is capable of withstanding high-pressure scenarios without fracturing. That alone differentiates it from many projects that look strong only when the market is quiet. So what does this mean moving forward? If XRP continues to demonstrate deep liquidity, consistent settlement speed, and structural stability during volatile cycles, its case as a serious financial bridge asset strengthens significantly. Markets ultimately gravitate towards systems that function reliably under stress. Whether you are a long-term holder, a trader, or simply an observer of digital finance, this development deserves attention. The ultimate liquidity test may not just be about surviving volatility, it may be about proving readiness for global scale. If you found this breakdown valuable, make sure you subscribe, turn on notifications, and share this video with someone who needs to understand what's really happening behind the headlines, because the next phase of XRP's journey could unfold faster than most people expect.